So today, we're diving into something really cool called AlphaAgents. It's this idea of using entire teams of specialized AIs to pick stocks. Pretty wild, right? Let's get into it. And really, it all comes down to this one huge question. Could a team of AIs, working together, actually manage your money? Could they make smarter investment decisions than us? Or even, and this is key, smarter than a single AI flying solo? All right, so here's how we're going to break this down. First, why is this even a problem for us humans? Then, we'll meet the AI team. We'll see who's on it, how they argue. Yep, they argue. And of course, the big one. Did they beat the market? And I'll wrap up by looking at what this all means. Okay, so let's start with section 1, the investor's dilemma. Why is picking stocks so darn hard these days? Well, a huge part of the problem, it's us. Look, as human analysts, we're up against a wall of challenges. First, there's just so much information. We're talking mountains of 10Ks, nonstop news, endless reports. It's an overload. But even if we could process it all, we're still human, right? We have these cognitive biases baked in. We get overconfident or we're too scared to sell a stock that's tanking, that's loss aversion. And our own personal experiences, they totally skew how we see things without us even realizing it. All of this means we end up missing huge opportunities. And listen, this isn't just some vague idea. It's backed by solid research, like Kahneman and Tversky's famous prospect theory. The key thing to remember is that these biases are usually unconscious. You don't even know they're happening. That makes them almost impossible to beat, even for the pros. So what if you could build a system that just doesn't have those human flaws? And that brings us right to the solution proposed in this paper. It's time to assemble the AI team. We're talking about AlphaAgents, a framework that tackles this problem with, you guessed it, a whole team of AIs. So, what is this thing exactly? Well, at its core, it's what's called a multi-agent system. Think of it like this. You have multiple AI agents, and each one is a specialist in something different. But here's the cool part. They don't just do their own thing. They collaborate, they share information, and they even debate each other to hash out the best possible answer to a problem. Honestly, the best way to picture it is to imagine one of those top-tier investment committees at a huge firm, right? You've got all these brilliant specialists sitting around a table, each bringing their own perspective. Now, just swap out all the humans for AI. That's exactly what AlphaAgents is trying to do. Okay, so who's actually on this AI investment team? Let's meet the 3 experts that form the core of the group. First up, we've got the fundamental detective. You can think of this one as the old-school, by-the-book analyst. It's the agent that puts on its reading glasses and just dives deep into those super dense financial reports, your 10Ks, your 10Qs, all to figure out one thing. Is this company's financial health solid for the long haul? Then you've got the sentiment analyst. This agent is all about the here and now. It's constantly scanning financial news, what other analysts are saying, all to get a read on the market's current mood. What's the buzz around a stock? Is it positive? Is it negative? And how is that chatter going to hit the stock price today? And rounding out our trio is the valuation guru. This is the team's quant, the pure numbers expert. It's obsessed with historical data, price, volume, you name it. Its job is to spot trends, measure how risky and volatile a stock is, and ultimately answer, based on the math, is this stock a bargain or way overpriced right now? All right, so you've got these 3 specialists. That's great. But the real secret sauce, the thing that makes this system special, is what happens when they get together. This is where we get to the really fascinating part, the great AI debate. And this isn't just a free-for-all. It's a very structured process. First, each agent goes off and does its own homework. The detective hits the books, the analyst checks the news, the guru crunches the numbers. Step 2, they all come back and share what they found. Now here's where it gets good. If their conclusions clash, a formal debate begins. They have to argue their points and defend their logic until they finally hammer out a consensus. Is it a buy or a sell? So let's imagine a classic conflict, a debate over, say, Company Z. The valuation guru comes in hot and says, whoa, the volatility is way too high, this is a major risk, it's a sell. But then the sentiment analyst jumps in and says, hold on, all the recent news is fantastic, the buzz is great, this is a buy. This is the exact moment the whole system is built for. So what happens? Well, the debate forces them to find the middle ground, to come up with a smarter, more nuanced decision. Instead of a simple thumbs up or thumbs down, the consensus might be something like, okay, it's a cautious buy, but we have to keep a very close eye on that volatility. See? It's a much more intelligent outcome because it takes both valid points into account.
Now, this all sounds fantastic on paper, but the million-dollar question is, does it actually work? Did it make money? To figure that out, the researchers put it to the test with a 4-month backtest to see how it held up against the market.
And the results? Well, they're pretty eye-opening. For their main strategy, which was risk neutral, the performance was fantastic. The multi-agent team, that's the one that debates, delivered the highest return. It didn't just beat the market benchmark, it also beat a strategy run by just one of the agents on its own. And that's the big takeaway here. It's the collaboration, the debate, that makes all the difference. But hey, not everyone is trying to shoot the moon. Sometimes the name of the game is just not losing money. So what happens when you switch gears and tell the AI team, okay, be conservative, build me a risk-averse portfolio? And this is where you see the trade-off, which is super interesting. This cautious portfolio didn't necessarily crush the market returns during the test, but it was a star at something else, protecting the downside. It had significantly reduced drawdowns, which is just a fancy way of saying when the market got choppy and went down, this portfolio lost less money. It did a much better job of mitigating losses. It was built for defense, and it played great defense.
Okay, so we've seen how it works, we've seen the results. Let's pull back for a second and ask the big question. What does all this mean? Is this the future of investing?
I think there are 3 really important things to take away here. First, collaboration is absolutely key. That debate process isn't just for show. It really does lead to better, more rigorous analysis than a single AI could do. Second, it's a great way to fight bias. Not just our human biases, but it also helps with AI problems like hallucination, because the agents basically fact-check each other. And finally, look, this isn't putting human fund managers out of a job tomorrow, but it's a huge step forward. It's a powerful new kind of tool on the path to smarter, more automated investing. Which kind of leaves us with one last big question to think about. If AI teams can debate and reason their way through something as chaotic and complex as the stock market, what's next? What other really high-stakes human decisions are on the table? Think about medicine, or law, or even corporate strategy. Where else could a team of debating AIs change the game?